Good morning, I'm Maiki Oreta, and this is Business 360. From markets to policy, from Manila to the world, we cut through the noise so you can navigate, adapt, and lead in a changing economy. The Philippines is closing in on upper middle income status, but the 2025 growth slowdown is raising new questions about whether that momentum can hold. The government is resetting its economic outlook as the peso weakens, with slower growth and currency pressures now expected over the next 2 years. The Bangko Sentral is cracking down on crypto risks, rolling out tougher rules to combat dirty money and financial crime. China is bracing for a record spring festival travel surge, with passenger trips projected to hit 9.5 billion and signal a consumer rebound. Security experts are sounding the alarm on a new AI threat, warning that open source models could supercharge cybercrime and hacking risks. The Philippines remains on track to graduate to upper middle income country status this year. That's according to the Department of Economy, Planning and Development, despite a sharp growth slowdown in 2025. Economic Planning Secretary Arsenio Balisacan says that the Philippines can still achieve UMIC status this year despite the weaker than expected 4.4% GDP last year. Now, he says they still have to redo the numbers, but with the 4.4% growth in 2025, the Philippines should still be able to reach the average income class status. The country remains stuck in the lower middle income bracket, having failed to move out of it since 1987, despite posting a higher gross national income per capita of $44.70 in 2024. Under the World Bank's latest country classification, the Philippines' GNI per capita is just $26 shy of the adjusted requirement of $44.96 to $13.94, up for upper middle income status. Now, the Washington-based lender is scheduled to release its updated annual country status thresholds in July. Last year, Balisacan said that the Philippines needs to sustain 6% growth from 2025 to 2026 to ensure its GNI per capita meets that UMIC threshold. Now, our economy grew by 3% in the fourth quarter of 2025, bringing full-year growth to 4.4%, well below the government's target. The SGV Government and Infrastructure Bulletin says that the slowdown reflects natural calamities and governance challenges. It adds that low inflation, accommodative monetary policy, and strong export demand continue to provide support for our economy. Agriculture and services growth moderated while industry contracted. Construction declined by 7.1%, partially offset by private sector investment. Despite the weaker performance, the administration says governance reforms and infrastructure projects are being pushed to strengthen accountability and support more sustainable long-term growth. The economic team is resetting expectations, lowering its growth outlook to 5 to 6% for 2026 and 2027 as it braces for a weaker peso. Economic Planning Secretary Arsenio Balisacan says that government planning now assumes that the peso will trade between 58 and 60 to the dollar, the key input for fiscal targets and macroeconomic decisions. The peso has continued to slide, hitting a record low of 59.47 per dollar in January as the current account deficit widens and investor confidence remains subdued. Balisacan says slower growth will weigh on government revenues, but the administration is shifting focus toward spending quality and project execution to contain the impact on our economy. Now, the Philippine Chamber of Commerce and Industry says exports are showing a bright spot, but warns that another round of infrastructure corruption could delay the economic recovery. PCCI President Betty Ferrer says that the 3% GDP growth in the fourth quarter of 2025 reflects the aftershocks of the flood control scandal and a pullback in government spending. Exports jumped 20% in the fourth quarter, a development Ferrer calls encouraging. He also welcomes Public Works Secretary Vince Dizon's commitment to resume 200 to 250 billion pesos in spending infrastructure. But Ferrer stresses that spending must come with safeguards. He calls for stronger corrective measures and proposes using blockchain technology for the 2026 national budget to improve transparency and prevent a repeat of past mismanagement. Now, President Ferdinand Marcos Jr. launches the National Education and Workforce Development Plan for 2026 to 2035, calling it a turning point for long overdue education reforms. The president says EDCOM2 final report, entitled Turning Point, a Decade of Necessary Reform, lays bare the country's learning crisis and sets out a 10-year roadmap to fix gaps in basic education, skills training, and workforce readiness. He urges government, educators, industry, and communities to move together with discipline, consistency, and urgency to ensure no Filipino is left behind.
These documents reveal where we have fallen short and what we must do to improve our educational system. The final report of the EDCOM2, aptly named Turning Point, a decade of necessary reform, provides a clear picture of the learning crisis that our education system needs to overcome. The report includes the NAT plan, which offers us a 10-year plan to address the learning crisis that can be solved if we act in unity and with determination and with consistency. Ladies and gentlemen, this report shows us that we must think beyond the present, beyond my administration and current leadership, local leadership terms. It calls on government, educators, industries, and communities to improve our educational system into one that will prepare every Filipino to meet the challenges of our time.
The submission of the final report marks the end of EDCOM2's initial term, which was created in January 2023 to address decades of underinvestment and weak learning outcomes. Now, the Bangko Sentral ng Pilipinas is moving to tighten oversight of cryptocurrencies as authorities try to balance fiscal innovation with rising risks to the financial system. BSP General Counsel Roberto Figueroa says new regulations will complement the Anti-Money Laundering Act, addressing the speed, scale, and anonymity of virtual asset transactions that make them attractive for illegal activity. The central bank says virtual asset service providers currently pose medium to high money laundering risk, with heightened concerns around decentralized finance platforms and unhosted digital wallets. The move comes as regulators worldwide step up scrutiny of digital assets amid growing pressure to protect financial stability and preserve the country's regulatory credibility. Authorities say that the timing of implementation will depend on the availability of technology to trace criminal activity without choking legitimate fintech innovation. Now, the Department of Public Works and Highways is moving ahead with 1.8 billion pesos worth of resettlement housing projects this year as government tries to address urban congestion, flood risk, and the persistent housing backlog of informal settlers. The project will cover Metro Manila, Calabarzon, and Central Luzon, with DPWH regional offices implementing multi-purpose housing developments funded under the 2025 General Appropriations Act. Locations include San Juan, Manila, Navotas, Rosario, Naik, Bacoor, and San Ildefonso, with individual project costs ranging from 200 million pesos to 300 million pesos. Public Works Secretary Vince Dizon says regional offices are required to coordinate closely with the National Housing Authority and other agencies to ensure proper site development, orderly relocation, and timely project delivery. The program is part of a broader push to move families out of high-risk areas, support urban renewal, and reduce disaster vulnerability at a time when the government is under pressure to show that public spending translates into visible, on-the-ground results. Now, the Philippines imports 1.64 billion kilograms of meat in 2025. That's up more than 13% from the previous year, a move that helps contain food inflation but deepens reliance on foreign suppliers at a time of peso weakness. Pork makes up 51.8% of total meat imports, followed by chicken at 32.9% and beef at 12.6%, keeping input costs in check for food manufacturers, retailers, and restaurants. Brazil remains the top supplier with 41.3% market share, followed by the United States at 15.9% and Spain at 10.2%, as traders diversify sources to manage price volatility and supply risk. For businesses, higher meat imports mean short-term price stability, but also greater exposure to foreign exchange moves, global supply shocks, and trade disruptions. The data underscores a key challenge for 2026, which is how to balance cost control for consumers with long-term investment in local agri-production to reduce import dependence and FX pressure. Now, in other news, the Securities and Exchange Commission is warning that promoters of Interactive Brokers Group Incorporated, including influencers and endorsers, could face criminal charges. Penalties include fines of up to 5 million pesos or prison terms of up to 21 years. The regulator says IBKR is not licensed to operate as a broker, dealer, or exchange in the Philippines and is not registered under Philippine corporate law. IBKR offers trading in global assets, including stocks, options, forex, and cryptocurrencies, and has been promoting its services locally through social media and its mobile app. The SEC says that these activities amount to the offer and sale of securities to the public, which require prior registration under the Securities Regulation Code. We're taking a quick break. More news and the context behind it when we return. This is Business 360. Welcome back. The GDP numbers are now in and they're weaker than expected. Fourth quarter growth slowed to 3%, the lowest non-pandemic quarterly rate in about 14 years. For full year 2025, the economy grew just 4.4%, missing the government's 5.5 to 6.5% target for the third straight year. Now, this is happening even as inflation is low. Interest rates are easing and the central bank still has room to move. The data tells us where we are. The real question is what comes next. Joining us now is Stephen Kuenhing, a veteran investment banker, former chairman and CEO of Evercore Asia, and independent director of the Maharlika Investment Corporation. Hi, Stevie. Thank you for being here with us.
First, thank you to you, and thank you to Bilyonaryo for inviting me again. I hope you had a relaxing and enjoyable holiday break.
Thank you, Stevie. Well, you are always welcome. Let's talk about GDP. It was a surprise to the downside for many. Was it a surprise to the downside for you?
Well, I don't want to say I made a strict prediction, not being an economist, but I did feel the downside risk was greater than an upside surprise on the revised range. Because what are the three things which drive short-term growth? Number three is direct investment, whether foreign or local. And frankly, it's been very low for a while. Number two is an unexpected influx of either hot money or short-term money, which then gets translated. Stock market investments, OFW remittances being higher, and it was normal. Okay? The biggest in this country, unfortunately, is government spending. And as the second President Aquino also found out the hard way, when you have these corruption investigations and everybody's scared to disperse money even if it's been appropriated, there will be a short to medium term dip. And this shows us how big a role government spending is in determining the growth. Now, I'm not commenting on the quality of government spending or the efficiency. I'm just talking about the quantum.
Yeah.
And when the quantum goes down and it's counted on very heavily,
Yeah.
GDP will go down.
We see it, we feel it, and given the numbers, everyone understands how important government spending is exactly. I mean, we wanted to grow 6-7%, and without government spending, that is not going to happen. This is what we get. So we want to understand where we are now and where we're headed. We need the 6 to 7% to really create jobs, raise incomes, and keep investors confident. But when our economy grows at this level, closer to 4% over several years. What does that mean for job creation, fiscal space, and long-term investor confidence?
There are three separate issues. Okay, so first, fiscal case is different because it depends on, first of all, what's our debt to GDP and and the willingness of the central bank to, frankly, create money, because that also is dependent on the absorptive capacity of the economy. So that's a separate issue. And then if you feel you need to borrow a lot internationally, the guidelines, which is an arbitrary one by the rating agencies, is for a third world country that does not have a reserve currency. Because, for example, debt to GDP, they say if it's around 60% debt to GDP, give or take, you're a solid investment grade country. And we're roughly there. So that's why I don't anticipate any ratings changes or so on, because we're within the acceptable spot. Now, somebody might say, why is Japan at 200% debt to GDP and the US at 150% GDP, and yet they're very highly rated? Well, the answer is most of the debt is borrowed in their own currency, so there's no foreign exchange risk, number one. And number two is the absorptive capacity is very high. And number three, they have reserve currencies. It's the US dollar and the Japanese yen. We do not have, unfortunately, in common with all emerging market countries, any of those three. So the guideline, if we want to borrow abroad and maintain an investment grade rating, fair or unfair, is around 60% debt to GDP. That's where we are. Okay. Now, job growth. Yes, it's not good. And if it stays at this level, it will remain not good. And this is something that has been happening since the 1970s when we had the beginnings of the OFW. Yeah. It was supposed to be a temporary expedient. And here we are. This started before you were born. And I was a teenager when this started. I'm now going to turn 67 in a couple of months. And it's still going and bigger because we have to tell over 1 million people every year, go abroad or you'll have no job and starve. So it means we will become even more dependent on OFW deployment to keep the economy going because the local economy is not creating enough quality jobs.
Absolutely. I mean, when you say not good, Stevie, you're putting it very lightly. What we need to take into context also is the fact that we have population growth.
Exactly.
We've got massive population growth.
I mean, I've publicly stated, people have talked about the demographic dividend, which I think is frankly nonsense. I usually use a stronger word, but I'll be polite. It's a new year, okay? Nonsense. Because what is the argument? If you have a lot of young people, so you have more workers supporting lesser retirees. And when the opposite is true, you're burdening the workers on retirement to pay for retirement, like what the dilemma Korea, Japan, and some Scandinavian countries have. But my answer to that is that assumes two things: full employment and a high standard of living, neither of which we have. And not to mention a qualified workforce as well. Because here is my point. Who was the most anti-demographic dividend country in the world? China. I mean, you cannot be more anti-demographic dividend than having a one-child policy for 40 years. Who's been the highest growing country for decades? Consistent compound growth.
We can take a lot of pages from them. Going back to the credit rating, in the first half of 2025, everyone was talking about an upgrade to the coveted A. Right now, nobody's, of course, not even talking about that. But when does this shift turn into, when does it really become a real downside risk for our credit rating? What are the things that need to happen for that to go down that spiral?
I don't anticipate a downgrade for two reasons. What are the two things that happen? One is your actual debt to GDP level, which is what the rating agencies give. Again, people can argue it's fair or it's unfair, but it is what it is. It's roughly 60. So if we don't go overboard in debt to GDP, and we stay within the band we are in, there will not be a downgrade. Number two, what happens if you stay within that? Now, if there is, ratings are both backward-looking and forward-looking. So if they anticipate much worse economic performance going forward, they won't downgrade, but they will issue a warning to say, look, fix this and everything will be fine. Don't fix it. Don't say we didn't warn you. So that's what's going to likely happen.
That's a good thing about them. They issue that warning first.
No, because in fairness, the warning is to say we are seeing trends. The trends can happen
and they can
or
change.
can be avoided.
Okay. Also, I want to ask you, Stevie, you are a veteran investment banker and you were in this heavily before. From where you sit, what does deal flow look like in this environment with growth at these levels?
Abysmal. I mean, there's some, but it's not the level. But the real problem, it's not so much, okay, let's say noise, which is quite loud, does not help. But let's not mistake to use the old phrase in the US. Let's look at the steak and not the sizzle, okay? What is the fundamental? The fundamental is most foreign direct investment and most local direct investment is in industry, in manufacturing. And if we don't have, we have abysmal industry and manufacturing in the country, where are you going to create jobs? Look, I'm an advisor, besides Maharlika, I was advisor to a PE firm, advisor to VC firm. They were all very excited, 2022, to come here. And they said, what am I supposed to buy? I'm happy to buy something, then put in more money to improve it. But there's nothing to buy. Now, it's different from a foreign strategic who'll say, from a greenfield, I'm willing to start from scratch.
Yeah.
But that's not most. Most say, there is a market, there is a provider, and I want to add money to improve on it.
Not everyone is willing to start from scratch with that
but
risk.
My point is, there's nothing. Apart from food processing and a few other industries that are limited, you do not have anything close to what Vietnam, Thailand, Indonesia, and Malaysia have in manufacturing. And until we address that, there will not be substantial growth, and we will be a nation of labor exporters, of human labor exporters.
Which is what we have been. How can we address this? I mean, monetary policy can only do so much.
I agree.
The BSP meets in February. People are saying that they should cut rates further to spur growth,
Okay.
but how much? I mean, they've already done all they can, and we have this.
It's just like anti-corruption. I am against corruption. But the absence of malice does not equal virtue. So good monetary policy does not replace industrial policy and government guidance, okay? Now, so what we have to do is we have to increase manufacturing investment. And how do we do that? We don't start like basically in the late first President Marcos era where they had 11 major industrial projects, only a couple got done, and then they were privatized and sold off, Pasar, things like that, okay? Now, the key is we have to focus now because we frankly missed the boat and we're 45 years late. Because most of the foreign direct investment in manufacturing, unfortunately in Asia, was done in the 80s when the Europeans, the Americans, and the Japanese started building manufacturing facilities in our neighbors. And because of the, let's just say, tumultuous decade the whole 1980s were, we were left out.
Yeah.
Right? No need to really relitigate that and put blame because let's look forward. So now, what is the closest example to people who in the last decade or so were successful in jump-starting new segments of manufacturing? Broadly, Vietnam. Narrowly, Indonesia. What did Indonesia do? They said, this actually is the model for us. We export a lot of raw mineral products, mining products, nickel, copper, bauxite, iron ore, besides oil. And they said, they started with nickel, where they were number one, to say, we will now allow no more raw nickel exports. Everything has to be processed. And what did they do in 9 years? Before Widodo said that, the exports, and I have the data from Financial Times somewhere, was, if I recall correctly, $4.9 billion. 9 years later, when the manufacturing and processing plants kicked in, it was about 60 billion. So it can be done. And why were the people willing to do it? Because they couldn't replace Indonesia as a source for nickel because it was number one.
Yeah.
Now, we are number two, a distant number two. But we can start there.
Yeah.
We can also start doing the same thing with copper and so on. We start there, we get the beginnings. Now, another thing I would say, like, what did Thailand do recently? Well, not recently, 30, 40 years ago. They also found gas in the Gulf of Thailand, as did Malaysia. Now, their gas is cheaper than ours because it's shallow water gas. Ours in Malampaya is
very deep.
But what did we do with our Malampaya gas? We just used it for power generation because we had shortage of power, which is another issue. What did Thailand do? and Malaysia. They said, we'll use some of it for power. The rest jump-started a petrochemical industry because you had cheap feedstock.
Yeah.
And now they have a robust, you know, PNOC was formed in, I believe, 1974, and PTT was formed in 1976. PTT now has a market cap, I think, of around 80 billion because they're now integrated. They're not just petrol stations or oil drilling.
Yeah.
It's a petrochemical complex.
And it's a fuel for economic growth.
Exactly.
Yeah.
So we start with what we have and not think, this is what we have, let's use it. No, this is what we have. How can we create more value?
Yeah. Okay,
Yeah.
moving along, you also sit on the board of Maharlika.
Yes.
So let's bring things back to the fund itself. You know, Maharlika positions itself as a long-term strategic investor.
Yes.
In a below-target environment like this, what can Maharlika do?
Well, we are not first an activist shareholder who takes control of companies. So we can back people and back industries where we either preserve important jobs and markets or enhance them.
I know what you're alluding to, so let's get to it. Okay, Maharlika's 8 billion peso investment in Asian Terminals Incorporated, DP World delisting and the public interest behind it. Help us understand, why did Maharlika choose to invest 8 billion pesos in Asian Terminals, a port operator with a major foreign partner in DP World? Some see it as strategic, some see it as controversial. How do you see it, Stevie?
Well, first, it's not controversial because it's only controversial to Bilyonaryo.com, who wrote 4 articles about it without asking the other side's view. They could have gladly asked Maharlika for their view, or Yositanko or Dubai Ports, but they didn't. Now,
well, that's why we have you today.
That's why, but nobody else wrote about it, so I would take issue with controversial. Now, what is the merits? Why? Do we not agree infrastructure and transportation and facilitating trade and making it more efficient, faster, and cheaper is good? There.
Okay.
We're willing to put money in a port operator who's going to take a long-term view, add more money, and expand and build new ports.
Yeah, and also help us understand why this is better than investing in a greenfield project. Because, you know, some are going to say that, you know, why not invest in a greenfield port elsewhere so you can generate jobs, create alternate routes, and revive regional economies. But also there's that risk that comes with starting anew.
Okay.
So tell us how you see things.
Okay, for example, like the BSP has 2 purposes. They want to have stable interest rates and stable exchange rates. All right? They want low inflation and stable exchange rates. In the same way, Maharlika wants to spur development. That's number 1. But number 2, it's not supposed to lose money. It's supposed to make money. Now, so there's a balancing of interests. If we went completely to a greenfield, we could. And we're willing to in certain circumstances. But if there is an operator who's willing to invite us, who has existing operations which can be improved and can be expanded, and is also looking at additional ports, don't you get both? The benefits of an expansion, which is like a greenfield, but the benefits of participating in an existing operator, which is already profitable?
Yeah.
So why not do both
when
you invest, which
Okay.
we hope we've achieved with our investment in ATI.
Yeah, and with that investment, it's going to change competitive dynamics in the industry. What are your thoughts on this, Stevie?
Well, are we supposed to spur additional business, whether helping an incumbent, and there are more than one incumbent, helping a new entrant? The answer is Maharlika is agnostic. If we are given a good opportunity, we will study it, and hopefully, if we're invited and the terms are good, take it. But we're not handicapping this person or that person. That is not our role. That's the Philippine Competition Commission's role, not us. We're just saying, is it a good investment with good partners? So, are we supposed to pick one over the other, or are we supposed to evaluate who is willing to accept our money?
Yeah. You know, with this investment, how sizable of a competition does ATI become in this space?
Well, again, sometimes it's not a zero-sum game. If you spur trade, you spur investments, and you spur inputs, can't both sides win? I mean, does every loan BDO make kill Metrobank or BPI?
Okay.
No, because as long as the market is growing, they will all grow. But at the same time, the competition between the banks leads to better banking services. So
Correct,
I don't
correct.
view it as an
Yeah.
either or.
Yeah.
It's really a case-by-case merit. And as I said, most important, Maharlika is not here to crown winners and losers. It's basically to make good investments and be agnostic on who the partner is, as long as it's a good partner. We're not choosing one over the other. We're just saying, this is a good investment. Thank you for inviting us. We're honored we could agree on terms.
Yeah. How soon can you start realizing the benefits, the fruits
Okay,
from this
we
investment?
are a long-term, okay, let me go back again also now. One of the things, people, is that we are a long-term investor. Because if we wanted to make short-term stock market investments and get out in 3 months, GSIS and
Yeah.
SSS and other pension funds do that. So we're supposed to make money, number 2, but spur development,
Long-term.
number 1.
Yeah.
So that is a long-term prospect. So that probably means non-public companies that need expansion capital to grow and are in the sectors that are important to us.
And that's why this fits
Or
into your
public
mandate.
companies that will go private because, and I'm going to explain this very clearly, some companies who are going to take long-term plans and bets and execute them are taking risk. It might work out well, it might not work out. But there is no reward without taking risk. Okay, so a bank that has no bad loans is making no loans because you cannot hit 100% return. Very hard. Okay, so you have to take a calculated, hopefully a good risk. I have made money in some of my private investments and I've lost quite a lot too. But on balance, I hope I'll make more money, which I think I have so
Yeah.
far. So, but it's not perfect. Now, however, the execution of that policy and that plan has risk and takes time. And sometimes that is better in a private company that does not have the vicissitudes of meeting quarterly forecasts.
Yeah.
And it's also better not to expose short-term investors who will buy and sell on a daily basis.
You want
to
the
that kind of-
long-term investors.
Yes, and
Yeah.
a lot of times, as I explained to you, these long-term investors are even more critical because an investor in a public stock can just
Can
say,
sell.
I've had it,
Yeah.
out, or I like it more. While someone who is in a long-term investment in a private company basically says, you better get this right because I cannot get out.
Yeah.
And so they're actually more critical and more exacting. The difference is they take a long-term view. Like they would say, I have a 5 to 10 year plan, not a 5-day plan.
Okay. Okay. Looking ahead, how does the ordinary Filipino benefit further down the line, as this is indeed a long-term investment?
Now I will talk about investors and customers. Customers, hopefully, improve port facilities, additional port facilities will just give the person more choice at better cost. Now, I do want to take issue with the, frankly, in my view, inaccurate, and I'm not going to assuage anything beyond that, discussion that Bilyonaryo said. Because they basically said, first, why is Maharlika going into a private company rather than public? So first, let me ask you, do you think GIC of Singapore is a intelligent sovereign wealth fund investor or not?
Of course.
Okay, so why didn't Bilyonaryo criticize them when they took EDC public together with Macquarie and the Lopezes? No criticism. So why now you're criticizing Maharlika? Now, why did they, basically, they actually, Macquarie and EDC and GIC told the Lopezes, please delist EDC because we want you to enter into a long-term plan to add to the geothermal capacity, do these enhancements. And we want you to be undistracted by share prices and all these covenants and all that stuff. And have a 5 to 10 year growth plan. Okay, same thing with Maharlika and ATI, number one. Number two, the guy that, Ethos investment guy, James Fletcher, I'm not sure he understands takeovers, and I'm happy to debate with him if you want to invite him to the show. He said, we are only offering a 5 to 8, whatever number premium. He doesn't understand the difference between undisturbed price and arbitrage. Can you please show the graph of the price.
Oh, we don't have that. We weren't able to pull that up from,
All right. Well,
from Bloomberg. Anyway.
The offer price for the takeover, which is being voted on today, is 36 pesos. You do not look at the price a few days before or even a few weeks before.
Okay.
You do not look at the price post-announcement. You look at the price, what they call undisturbed price, which means before there was any speculation in the market or talk about taking it over. What was that price? 17.50. He was saying, shouldn't there be a 15 to 20% premium? Well, shouldn't you be happy with a 100% premium? Because the price for the takeover is 36, number one. Number two, then he was complaining at the time the article was written that it's trading at, I think, $32 and it's 36. So it's my point is, that is the arbitrage price, not the undisturbed price, because there was already announcement at 36. Naturally, the stock will trade up. And as you noticed this morning, it's at 35. Why? Because the vote is today.
Yeah.
So if the vote passes, which we expect, then you tender next week and get 36 at the close. Now, and I gave another example just so he'll say I'm giving concrete examples. Kenmare Resources is a UK and Irish listed mining company with about $500 million market cap. I just follow it because the CEO, the managing director used to be was my classmate in Wharton and we're good friends. It was trading at a price. It went up 30-40% when there was an announcement of a takeover. During the negotiations, the takeover was abandoned or reduced, and then it was rejected, the reduced price. It has now gone back to trading at its undisturbed price, so minus 40%. That's what's going to happen to ATI if this doesn't push through. So what that fund manager is saying is, oh, I want more upside and we so little. Guess what? It's going to go back to 17.50 or lower if there's no takeover, because that's what the market gave it as the value before all of this noise.
We're down to 1 minute.
Sure.
Just wrapping it up. Tell us about, just concretize why this is really important right now for our economy. Right now, our growth is down, and this investment, how moving forward, it's going to change the game and help uplift our economy.
I don't know if it will change the game. I don't want to overstate things. Should it help? Yes. If there's additional port capacity, lower cost and more efficient infrastructure in whatever area, ports, roads, bridges, airports, transportation, doesn't it help? And isn't that what Maharlika is supposed to do? Inclusive developmental growth and make money.
Yeah.
So we invested in a profitable enterprise that was undervalued. We're giving high value to the investors who will get out the private. The new controlling shareholders will engage in a long-term plan to enhance value, and everybody can benefit. And as I said, every loan BDO or BPI makes does not come at the expense of them or the other banks. Don't we want competition? Don't we want additional services? And don't we want not ruinous competition, but consumers to have a choice, and the players in the industry to basically be sharp?
Yeah. All right. Well, Bilyonaryo was first to talk about this, but I'm sure many others will as well, because when you're talking about taxpayers' money, everyone's going to want to,
So aren't you happy we bought
into
into a profitable company at a low price?
Okay. All right. Thank you very much, Stephen Kunhing, veteran investment banker. Okay, we're going to be taking a quick break. More business stories and the signals behind them when we return. This is Business 360.
Thank you again.
Welcome back. 3 major local airlines commit to lower fares, yet Philippine tourism faces backlash over high travel costs and controversies surrounding the tourism chief. The move comes amid criticism that domestic travel in the country is often more costly than going overseas, citing travel taxes, higher airfares, promo lapses, and alleged self-promotion under Tourism Secretary Cristina Frasco, factors seen as holding back Philippine tourism growth. In response, Frasco is defending travel taxes as necessary, while Malacanang reaffirms the president's trust, quelling rumors of a cabinet reshuffle. The online scrutiny reflects Filipinos' growing calls for improved government delivery and the recognition of tourism as a key driver of economic growth. highlighting the country's world-class islands and the hospitality of our people. Now, power costs in Mindoro could soon come down. DMCI Power Corporation is targeting approval by the second quarter of 2026 for 3 billion peso submarine power cable project. Described as a bridge project, the 19-kilometer Semirara Mindoro cable is seen as the fastest and shortest route designed to provide immediate relief ahead of the Batangas-Mindoro interconnection. At present, Oriental and Occidental Mindoro have a combined electricity demand of more than 100 megawatts, supplied mainly by diesel and bunker-fired plants, which are expensive and heavily subsidized. Once approved, the project is expected to lower electricity costs and deliver up to 2 billion pesos in annual savings from the universal charge for missionary electrification. Now, Ayala Corporation is partnering with Dubai-based supermarket chain Spinneys to enter the Philippine grocery market, adding a new international player to an already competitive retail space. Starting in the fourth quarter of this year, the partners plan to open 12 stores across Metro Manila, selling a mix of imported products, private label goods, and specialty items targeting urban consumers. The first stores will open at Ayala Mall's UP Town Center in Quezon City and San Antonio Plaza Arcade in Makati City, locations that will also test demand and foot traffic for future expansion. The move signals growing competition in Philippine food retail as developers and global chains bet on consumer spending, mall traffic, and premium grocery demand in key cities. Now, as travel demand continues to rebound after the pandemic, Japan has emerged as a top destination for Philippine travelers. But the surge is now straining visa processing systems. With the spring travel season approaching, travelers are rushing to secure Japanese visas, leading to a shortage of available appointment slots. Japan visa issuances for Philippine passport holders have increased more than sixfold over the past decade. Visitors from the Philippines to Japan reached a record 880,000 in 2025. In response, the Japanese embassy has overhauled its visa processing system to manage volume and to reduce bottlenecks. Measures include the opening of a dedicated visa application center and the introduction of an e-visa system to improve efficiency and maintain screening standards. The developments underscore strong Philippine-Japan people-to-people ties, even as the surge raises questions about the competitiveness of local tourism amid high costs, access constraints, and operational gaps here at home. Now, Southeast Asia's aviation industry is set for a major capacity expansion, with airlines across the region expected to add more than 300 aircraft by 2027, as leisure travel and regional connectivity continue to grow. Passenger traffic in Southeast Asia is projected to expand by around 7% a year through 2044, making it one of the fastest-growing aviation markets globally. Last year, Airbus delivered 42 aircraft to the region, while Boeing delivered 15, a total of 57 units, up from 38 a year before. By 2027, Southeast Asia is expected to receive at least 310 new aircraft. The expansion signals strong demand for short-haul and medium-haul travel as airlines position for busier routes, more frequencies, and new city pairs across the region. The build-out raises both opportunity and pressure, with more seats and routes supporting tourism growth, but also putting the spotlight on airport capacity, infrastructure readiness, and service quality at home. Now, maritime trade is remaining a key driver of global growth in 2026, with intra-Asia and Asia-Europe routes seeing the strongest activity. Sea freight volumes continue to rise, even as shipping lines expand fleets and optimize routes to keep capacity and rates in check. The Philippine Ports and Authority projects total cargo volume to exceed 320 million metric tons this year, supported by strong foreign trade and gradual improvements in port operations. At the same time, shipping companies are turning to digital tools and artificial intelligence to cut turnaround times, improve visibility, and lower costs. But the sector is also facing new pressures, from tighter climate rules to rising cybersecurity risks, challenges that could shape costs and competitiveness for Philippine trade in the years ahead. Now, flood losses in Southeast Asia surpassed $10 billion in 2025, making it one of the most damaging years on record for the region. In prior years, even major flood events typically caused between $1 and $2 billion in damage, putting the scale of 2025 losses far above historical norms. Here at home, communities and infrastructure continue to face pressure from stronger typhoons, back-to-back storms, and other natural hazards. Flood risks are being compounded by infrastructure gaps, policy weaknesses, and governance issues that have delayed or undermined long-term flood control projects. For businesses, governments, and insurers, the rising cost of disasters is translating into higher losses, greater uncertainty, and tougher decisions on investment coverage and risk management as extreme weather events become more frequent and more severe. Now, Chinese electric vehicle maker BYD has moved into the top 3 of Philippine vehicle sales in 2025, a significant shift in a market long dominated by traditional auto brands. Our mobility correspondent G. Baroga has the details.
A shake-up in the local auto rankings. Suzuki, Ford, and Nissan slipped from their usual spots in the top 5 following the release of BYD Cars Philippines' 2025 sales figures. According to AC Mobility, backed by Bilyonaryo Zobel de Ayala family, BYD sold more than 26,000 vehicles, marking its, quote, strongest performance to date. That's a 446% year-on-year jump. Leading the charge was the all-electric Seagull hatchback, while the plug-in hybrid SUV Sea Lion 6 topped BYD's DMI lineup.
那么很多的其实海外朋友也问我，他们关注到菲律宾的这个增长也是在东盟地区非常突出的。因此的话呢，其实正如我们当初所说的，今年汽车发展的趋势，它不是可选项，它是一个必然项。
In a statement, BYD Cars Philippines Managing Director Bob Palanca says new energy vehicles gained strong traction in the country last year. The takeaway is simple: making EVs affordable works. That's why BYD says it remains focused on keeping electric vehicles within reach of Filipino families. Riding on this momentum, BYD and AC Mobility have renewed their distribution partnership. The move is expected to bring in more EV technologies supported by charging infrastructure and after-sales services. Beyond BYD's core lineup, its luxury brand Denza has also officially entered the Philippine car scene. The company sees the country as one of the fastest evolving mobility markets in Southeast Asia.
在多个国家上市。 所有的市场都已经给予了非常好的支持和关注，所以26年我们非常期待 BYD 和腾势的一个双品牌在菲律宾以及东盟的多个国家和地区继续服务好我们的车主朋友。
Denza launches locally with 3 initial models: the D9 luxury MPV, the B5 midsize luxury SUV, and the B8 luxury large SUV. Denza has named Alabang, Cebu, Makati, and Green Hills as its initial dealer partners in the Philippines, seen as the first step in building a premium ownership ecosystem for future customers. For BNC Mobility, G. Baroga.
China is expecting a record 9.5 billion passenger trips during this year's Spring Festival travel period, highlighting the scale of movement during the country's biggest holiday. The annual travel rush spans 40 days, with the official Spring Festival break extended to 9 days for the first time, adding strain to transport networks across the country. Railway travel is projected to hit 540 million trips, while air travel is expected to reach 95 million passengers. The surge is being closely watched as a barometer of domestic demand, as Beijing looks to turn higher mobility into stronger consumer spending and economic momentum. Now, the surprise this quarter is not where the multinational tech company Apple stumbles, it's where it surges. After 2 rocky years, China is once again powering record growth. Apple reports $144 billion in quarterly revenue, beating guidance as iPhone sales jump 23% year on year. The iPhone 17 drives demand, lifting overall revenue growth to 16%, far above Apple's 10 to 12% forecast. China sales surged 38%, delivering $42 billion in net income. Chief Executive Officer Tim Cook calls it a remarkable, record-breaking quarter driven by unprecedented iPhone demand with all-time records across every geographic segment. Chief Financial Officer Kevin Park says it really comes down to the perception of the product line up, adding that the iPhone 17 family is the driver of performance. Margins reach 48.2%, and services revenue hit a record $30 billion. Apple forecasts continued double-digit growth. For the Philippines, stronger iPhone demand supports regional supply chains. Retail sales and services revenues tied to Apple's ecosystem. In other news, researchers warn that hackers could easily exploit open-source large language models, creating major security risks. A study reveals that criminals can hijack computers running open-source LLMs for activities like spam, phishing, and disinformation. Around 7.5% of LLMs analyzed had system prompts that could enable harmful actions, with a significant portion of deployments operating in China and in the United States. The research highlights the need for stronger safeguards as misuse of open-source models grows globally. Now, gold holds its appeal as a safe haven asset despite recent sell-offs. UBS Global Wealth Management says gold is expected to reach $6,200 in the first 3 quarters of the year. The precious metal dropped as much as 5.7% after hitting a record above $5,500 each, with silver down 8.4% and the dollar rebounding. Investors are watching gold as both a strong hedge and a potential gain opportunity in 2026. Now here's a quick snapshot of how global markets traded overnight. The S&P 500 and the Nasdaq ended lower on Thursday as earnings reports and concerns over big AI spending shook investors. Now, while the indexes recovered some losses by the end of the session, they were still weighed down by a weak tech sector. In Europe, London's FTSE 100 ended higher Thursday, led by financial and energy stocks as investors parsed a mixed bag of corporate results. Germany's DAX underperformed other regional indexes, closing 2% lower. Let's check on how markets in Asia are doing this Friday morning. Right now, everything is pretty much trading to the downside. The Nikkei 225 is down by 0.9%. Hong Kong's Hang Seng down by more, down by almost 2%. Shanghai's Composite also down by almost 2%. And Singapore Straits Times Index lower by 0.3%. Here at home, as of 10:53 this morning, the main gauge is also trading to the downside, not down by as much. We're just flat at 62.22. All shares index down as well, down by 0.3% to 35.38. Taking a look at the sub-indices, all are trading in the red except for the services counter, up sharply in early trade, up by 1.1%, helping limit the market's decline. Total volume is at 260 million shares, valued at a hefty 2.3 billion pesos. Now, market breadth is bearish with 91 decliners, 50 advancers, and 68 stocks unchanged. Taking a look at the currency front, the peso opened at 58.98 against the US dollar, down from its previous close of 58.95. Now, the winner of the U.S. Investing Championship is Harvard-based cancer researcher Tito Adhikari. Adhikari, again a Harvard-based cancer researcher, has won the U.S. Investing Championship, setting a new world record in the enhanced growth division. Adhikari posted a 2,115% return in 2025, earning more than $20,000 in prize money. In a post on X, Adhikari said that he began investing less than 6 years ago and credited supporters and competitors for pushing him to improve his strategy. He added that records are meant to be broken, encouraging other investors to aim high while continuing to learn. Now, before we go, our team chanced upon this post online circulating on X, a humorous take on how Southeast Asian nations are often described when it comes to visa rules. Here it is. Thailand, come for 60 days, leave, come back. Vietnam, pay an agent and don't ask too many questions. The Philippines, 59 days free, then just extend. Malaysia, 90 days, well, sometimes. Indonesia, Bali plays by its own rules. Cambodia, everything has a price and a smile. Singapore, follow every rule, every single one. And of course, this is satire, not official policy, just a snapshot of how visa discussions are often framed online. Is it accurate? That's debatable. Is it relatable? Some say pretty much. And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us, and keep it here on BNC, the Bilyonaryo news channel, and have a good weekend.